It's a new year for the stock market, and if it's anything like 2021, it is sure to be a wild ride. Joining our conversation this morning is our financial expert, Bruce Allen of Bruce G. Allen Investments. Good morning, Bruce. Happy New Year.
Good morning. Good morning, Natasha, on this cold morning.
Yes, very cold morning. Appreciate you being on the show. So, Bruce, we have some new and interesting year-to-date numbers. Yesterday, the markets really took a hit. What's going on?
A couple things. One is what we're seeing is a real disparity or divergence in terms of performance. We're seeing technology stocks getting hit pretty hard. And we're also seeing other groups like energy stocks and financials getting purchased pretty dramatically. So some stocks are selling off in the technology world, and in the energy and the financial stocks are actually getting purchased at pretty rapid clips right now in the last three trading sessions of the year, or the first three trading sessions of the year, excuse me.
Why are some stocks taking a hit while others are rising?
Yeah, what we're seeing so far is that many hedge funds are dumping or selling dramatically very expensive technology stocks that were the drivers of performance last year. And some of these technology stocks have very little or no earnings. And those stocks are getting hit pretty hard, Natasha. What we're also seeing is those companies, those same hedge funds are rotating into stocks that will benefit from higher interest rates and perhaps a faster growing economy than many people previously had thought. And the stocks that are getting purchased are energy shares and financial companies.
Yeah, that brings me to my next question. You know, for the last 2 years, it appears that the stock market has been mostly able to ignore the reality of the pandemic because of the underlying policies that have kept it afloat. This year, that'll change. Can you talk about the policies the Federal Reserve is expected to announce?
Last year, we had dramatic economic growth. We had economic growth of over 5.5%, Natasha, so very rapid economic growth. Typically, the Federal Reserve, when they see that, they get a little anxious about the fact that inflation, which has started to rear its ugly head significantly last year, may be more of an enduring problem than a temporary problem. And in order to fight inflation, the Federal Reserve is going to stop its bond buying and start raising interest rates. When interest rates rise, that impacts stocks in different ways. It's a negative for some of the very high-flying growth stocks. It's a positive for some of the old tried and true dividend-paying blue chips like energy shares and financial companies. And you're seeing that rotation, that shift from very expensive technology stocks into more reasonably priced energy stocks and financial stocks. And that's at least the temporary shift that's happened so far this year. And that's been driven by the view that the Federal Reserve will raise interest rates not just once, but perhaps 2 or 3 times this year and eliminate their bond buying program. And we're seeing interest rates rising in the country already, Natasha.
Yeah, that's going to have a major impact on the stock market. Bruce, so nice to see you. Thanks so much for joining us this morning.
You as well.